Yo, 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 what's happening, people? What's going on? Timely stream, ladies and gentlemen. We've got to have a conversation. Seems like we've got some things that need to be addressed. Mad love and respect for everyone passing through. I hope everyone is enjoying themselves. Yeah? Just waiting for a few more people to roll into the stream. Forgive me for my absence today. I've had Mini Market Maker trying to paint my nails in vector candle colors, doing all sorts. I narrowly missed all that anyway. I kind of diverted her attention away from that madness. But because then I would be obliged to actually showcase you guys my fingernails and the colourful images that my daughter likes to put on them. But anyway, the spoils of having a daughter, eh? That's what it's all about. But let's get back to business. Good evening. Good evening, good evening. Forgive me for coming on so soon. I know some people be expecting me at least in the next 3 hours. But I needed to get into the stream right now just to really solidify what the story is so that we can understand each development of the move. Okay, so I'm going to sit tight for two more minutes. Tanya, no problem. Thank you very much. Mad love and respect. So anybody new, be sure to subscribe. Evening hunters. I was expecting more downside yesterday. This run took me by surprise. Precisely, Perry. And this is what we're going to be discussing tonight. Because we have to accept that anything can happen, okay? But this move, we need to talk about it, okay? It needs to be discussed because I'll get to it in a second. I'm just waiting for everyone to roll in. What is a vector candle? No problem. We will have a conversation about what a vector candle is. If you are new to the channel, be sure to go to the Traders Reality website, okay? And you can download the strategy in front of you right now, which is free of charge to do so. It doesn't cost you anything, but you want more information, roll out to the Discord and you can join the community right there. Don't mess up the mania, bro. All right, then. Okay. Well, mad love and respect for everyone. Let's have a conversation about what has been going on. So I'm going to kill the music. Welcome to Traders Reality, guys. My name is Tino. Let's have a conversation. Okay, then let's roll out. So, music killed. Here we go. Bitcoin. Well, we've had a plethora of news announcements today. Okay, but given also that over the past week or so, we have had non-stop news. Okay, now, I said yesterday in the Discord that once all these news announcements that we've had all week that are all related to dollar, the US economy and what have you, you got the British economy, you got Canadian. It's always at the first of the month, they like to get all these reports out. Those reports tend to reflect the general tone to what traders are likely to do towards the end of the month, until there is another report towards the end of the month identifying key measures or financial economic indicators in various economies around the world. Okay, why does that affect Bitcoin? Well, guys, it's volatility. Okay, we understand that Bitcoin seems to have this disparity between stocks or the equities. So when the equities drop, Bitcoin drops. When the equities rise, Bitcoin rises. Okay, and we've been seeing that for a little while. Now, just quickly, if we go to the SPX right now, you can see the S&P 500 has been progressively rising up. We are looking to try and close this gap in the S&P 500. If you have a look quite closely, right there, you'll see it. So the principle is, ideally, that if Bitcoin is following equities, equities will continue up and Bitcoin is likely to continue up. That is the basis of what people are saying across the board. Now, firstly, the W formation. If you've been with me long enough, you will know when a W fails. And the failure of a W formation is if it goes in the opposite direction of the intended move of the pattern. So, here we go. Alan, how you doing, bro? Thank you very much, man. All week, ladies and gentlemen, we have been waiting for this pattern to form. Let's go back to a couple of streams ago, back on the 24th, 25th of January. Okay? We've been waiting for this pattern to develop. Now, the thing is, guys, when you are watching a pattern develop, you've got to have some form of discipline and say to yourself, until I see the structure that I want to see, then I'll decide to place my trades. Okay? But like you and myself, we're always ready with the trigger finger, waiting to just get in at the fear of missing out. Because we want to try and catch the move. Okay? Now, if we look at Bitcoin, over the past few days, we've been waiting to see if Bitcoin was going to come down lower, okay, and formulate this W formation to move to the upside. Okay? Now, what's important about this pattern is this. If I pull up, I'll show you this image. I'll get that up for you just a second. Right. So, Bitcoin needed to, in essence, come down a bit further to solidify the idea that the market maker was going to come down and hit previous pools of liquidity, because this is what we understand the hybrid system to be. Now, there are hundreds of systems out there, guys, okay? And I ain't doing this stream now to justify anything, okay? I've said it many a times. Patterns are not static. We can make the assumption that we are waiting for more liquidity to be taken out to the downside. Market maker decides to hold it at this point. Am I satisfied with that? No, because Bitcoin has just moved away from the range at speed. Okay? Which is why it's a bit of a cause for concern. Nothing has happened beforehand for us to grant why they've moved so fast to the upside. Yeah? Nothing has really happened. All they've done is just move price up. So we'll zoom in a little bit. They moved price up, stop hunt low, then rise. We see this all the time in the marketplace, but we don't see such massive movements to the upside. Now, all week we have been saying that my narrative is to see this pattern play out and favor higher prices. But this is where you come to understand your level of discipline in the system and your flexibility with how much confluence do you need to solidify a move away from a particular pattern. In other words, when do you decide to enter? Okay. Now, in my time of understanding these patterns, I trade the development of the pattern. So when price is coming down to the downside, I'm preparing to go long at the first leg of the development of the pattern. I'll be looking to go short in this area here. Then when price is coming to the downside, I'll be preparing my longs and getting ready to make the move up, because in this area here, I anticipate that the market maker is going to initiate 3 pushes away from this zone. Yeah? Are we all on the same page for the time being? Okay? Are we all on the same page? Are we all on the same page? Yeah? Cool. All right then. So, let's take it back. And this is something that you want to try and get into your minds at the same time as well, guys. All right? There have been many instances where we've waited for W formations to play out. Okay? They play out, but then you don't get the move that you expect. For example, this would be a nice W formation. All right? This is a beautiful pattern. Okay? Nice W, comes down deep into the previous leg, but doesn't break the previous zone, and then shifts out of the range, but then it drops. Principally, it's a pattern. You're waiting for the shift out of the zone, because the shifting out of the zone is going to take out the previous peak, and it's in this area here where they retrace back down, form level 1 rise to the upside. All right? So we would naturally get the move out of this area, come back down, and the concept says that it is likely to hold in this area here, and then price will make the move to the upside. Okay? Now, this is what we have been waiting for with this current play down here. All right? Let me just kill this for a second. Wait a sec. Ah, man, Bookmap is eating me alive right here. Hold on a sec, guys. Let me kill Bookmap for a split second. Sorry about this. Okay, then. Only jobs report showing that, but that's BS. Everything else shows inflation is increasing. Okay, isn't the top of the W somewhat similar to a stop hunt rise drop? Yes, that is a question. Okay, here we go. So now we've got this area here, guys. Okay, the move to the downside for me, okay, is not enough to solidify a move away to continue to move to the upside. Remember, guys, we are looking for a bigger play right here. Okay, as you can see, it was initially off the 4-hour time frame. This is a small retrace. So that is what my narrative was when I was waiting for the W formation to complete, because I want to see a deeper retrace. Now all of a sudden we've got this big move to the upside. Okay, now I just want to address something. People, I'll address that later on. Okay, but if you recall, just look at the moving averages. All right, where is their direction in the moving averages? There isn't any. This is a scalper's haven. Okay, swing traders aren't getting anything from this. Swing traders are looking at holding positions for either 3-4 days with the anticipation of something like this. So if a swing trader gets into a trade in the morning, he's hoping to close by the end of the session down here. Nice drop to the downside, and maybe hold it for 2-3 days and sees a nice beautiful move like so. Okay? But over these past few days, guys, we've only had this sideward action. And all they've done is come back up to the same spot that they got back to previously up here. Now, am I saying that this move is not going to be the move that moves Bitcoin to an interesting zone? I'm not saying it's not, but it's happened too fast. They've made it to the 800 EMA twice over here and they couldn't break it. Now, this would be one of the key zones for them to move away from. In my opinion, if Bitcoin is going to release to the upside and break this zone and continue on from tomorrow, for us to be in the safe knowledge that this move is going to continue higher, I would want Bitcoin to be above 45k. And I said this a couple of days ago, even 4 days ago, even the start of the streams, guys, on the Sunday. I'm not interested in Bitcoin going higher unless it can break above 45. Because look at the range that we're actually dealing with here, guys. It only takes Bitcoin to move up, 37 all the way to 40, okay? 3k to solidify that they are going to go now 100k to the moon. Right, okay then. That's fine. Let's take it, which takes us... Let me have a look at the poll that you guys have put here. Let's have a look. So the poll says, today's move is stop, hunt, rise, drop. So 56% of you have said that it's a stop, hunt, rise, drop. 25% of you said the peak of the W. And only 20% of you said Bitcoin 100k until the stream ends. Fair enough. Okay? Now, you may have heard me before say the following. Be mindful when price moves to a particular point in the chart which is out of the norm. Okay? And you can tell where out of the norm is. The 800 EMA. This is going to solidify if Bitcoin can go higher. Because if it can break away from this zone, then it means that once it breaks away from it, ends up in this area here. So I want to be above 44k at least, so that when it retraces back down, Bitcoin's moving averages would have enough time to get back up towards this area and establish momentum. What have you heard me say in the streams before? Where is our momentum? Is the 50 EMA and the 200 EMA showing direction to favor upside momentum by the clock? By, in essence, is it pointing 1 o'clock, 2 o'clock? Or is it pointing 4 o'clock, 5 o'clock? Or is it just straight 3 o'clock? That is, in my opinion, 3 o'clock, ladies and gentlemen. There is no movement. It's just wavy price action. Okay? If all it takes to start a bullish move, as they say, to the upside, a $3,000 move by Bitcoin, then fine. I give up. I will stop all my streams. Okay? We have to look a little bit deeper into this. All right? There's more to it. For the whole week, ladies and gentlemen, block your eyes, cover your eyes. I keep getting messages about this, and I'm so sorry. Here we go. For the whole week, ladies and gentlemen, we have been addressing the fact that there is a lot of short liquidation points that they have not been to see for a long time. We were saying the same thing about the longs, and price came down and hit that zone, and we've been now saying the same thing about the shorts, and they have taken this zone out. All right? So the short liquidation points, okay, earlier in the middle was $10 billion worth of short liquidations. That's how much money they have gone to attack today. They have absorbed it. All right? Here's an example. This is a snapshot from before with all the liquidation points. We took this at the start of the week. Let me expand that out. Back down when Bitcoin was in around the 33k zone. You can see that there are more shorts on the right side here, the blue, than there were longs. Okay? Yes, we are at a whole number as well. All right? But if you've been watching the streams for the past week, we've been referring to this because what reason does the market maker have to go to each zone in the chart? It's the commitment of traders. This is Binance. These are liquidations. These are people putting up margin in the charts. And the market maker earns off that. Okay? As it stands right now, ladies and gentlemen, we are now back to square one in terms of the liquidations. We've attacked the liquidations of the shorts to the upside because last week it was all about the shorts, the longs to the downside. So they hit that liquidity. Now they've hit this to the upside. As it stands now, ladies and gentlemen, there is roughly $18 billion worth of longs in the chart. Let's have a closer look. $18 billion worth of longs have been opened today. Okay, just in this zone right here, there's 2.33. Okay, $2.3 billion worth of longs have been opened in the last couple of hours or so. Let's dive in. Here's the perspective. All right. We've got 2 points in the chart at 40,777 with $102 million worth of short liquidations. And then, of course, 107, which leads to $209 million worth of liquidations for shorts. Okay. They tried earlier on, but they didn't make it. But what's concerning me, ladies and gentlemen, just in this range alone behind the vector candle is $253 million worth of longs. Everyone has been going long. There's the 253 million entry point. There was another 165 million right there. So we're nearly close to $500 million worth of longs being opened in the last couple of hours. Okay, we've got 174 million there. And finally, $123 million worth of longs right there. If you understand the nature of the business model, we know that in every time someone goes long, there has to be a short opened, because where are you going to get the profit from when you close in a profit? And where's the market maker going to get your profit from when he hits your liquidations? Do you understand? How's he going to pay himself? He doesn't pay himself until you hit your liquidation or your stop gets taken out. Okay? So this is why you see these fast moves happen in the charts, because they needed to run back up towards these areas here because people were in denial that Bitcoin was going to go back up again, which is why we have this influx of shorts being built. If we look at the vector candles in the zone, you can see we've been waiting for this return to this zone, but we've been waiting for a pattern to complete on the basis that if they do finalize this W formation, the move to the upside will be completed. Now it puts things into perspective. So we've got two options here, okay? Because Bitcoin hasn't really gone anywhere. Now for the day traders, it's a win-win, because day traders are only interested in movement. We're looking at seeing how long is it going to take Bitcoin to come back up to the territory that people are wanting Bitcoin to get back up to. We've spent a long time in this 30K zone, okay? Between 30 and 40K. Not much movement has been going on, all right? These big pushes up and then pushes down, and they're followed by retraces. It just smells of consolidation, all right? This was a liquidity run today, ladies and gentlemen. And don't be too hard on yourself. If you don't catch moves like this, that's fine, because they'll always bring it back down to go back up. They'll always move it down to go up, all right? If you caught any longs from lows down here, happy days. You are smiling right now if you manage to catch any longs. But there's no victory trades here, guys. No one's a hero when they open before anyone else. Okay, the idea is to be able to stay in the game and keep trading, because you can make one great call and get in a trade, and then you want to be so fixated on maintaining that trade that you will sit and hold it for so long and be in denial at the point when you really need to close it, because you don't want to miss out on what you thought was the start of a really big move. That's the mentality of the short traders right here. Okay? If it's not going in the direction that you expected it to go to, there's only one other thing you can do. You can change direction. There's a saying on the street that says, good traders cut their losses, great traders change direction. All right? And that's an old age saying in the street. Okay? Now, as it stands right now, guys, the second question in the poll itself, is this the middle peak of the W formation? Well, you've got two options here, guys, and it's all down to the time frame you trade, the risk that you're putting up. It's down to this, okay? If this is the move that we anticipate that Bitcoin's going to move back up to, okay, we can make the assumption that it needs to break out above the 800 EMA and start taking back the liquidity up here. It needs to come back into the last zone that it consolidated from, this area here. because it's this area that they managed to trap more longs. Now, if they do want to move price higher to take out the shorts, they're going to bring price back into this range right here, which is the 44K range. And that's going to trigger more traders to start being committed to the charts. So then they are now able to build positions in this area. Okay? So if Bitcoin can actually solidify this move to the upside and break above the 800 EMA, we ideally want to see a move up from here, for example, a retrace, a continuation back up. Okay? Remember, guys, this is only from 40K to 44K. We haven't really gained much ground. Okay? Bitcoin, in my opinion, you know, if we can get back up to the 51 zone, then game on. Do you understand? Because they've recovered from the zones where people were losing their minds. Okay? So, this is what we need to be mindful of. If the scenario's going to play out over the weekend where they maintain the price action and keep moving it higher, you want to wait for a retrace to at least come back down to bring things back into the fray, because the 50 EMA isn't showing a trend. Why is it every time you see a move to the upside, ladies and gentlemen? Okay, check this out. When the 50 EMA is pointing upwards, every retrace back down continues with a move up. Okay, so look at this. You've got to move away from the range at speed. They bring it back down. They hit the 50. They continue back up. This was a freak move in the zone. Okay, but they brought it back up because the trend is still continuing. The flow of money is still coming in. Now, if we go to Bitcoin right now, we're going to see a different story. The 50 EMA isn't trending. It's flat. Now, this is for my day traders, yeah? The 50 EMA isn't trending. It's flat. It's all wavy. There's no clear definitive direction. So this move, is it sustainable? Will the retrace just bring it back down into the psychological high? Was this move simply a pump to just attack the short liquidation zones? Guys, understand, $253 million worth of longs were opened at 3:15 today. All right? On top of that, you've got another 174. And then on top of that, 123. A lot of money has passed through to the markets. In this zone alone, there's $2.3 billion worth of longs open. Now, we're trying to work out what point is the market maker going to actually make a profit on that? Because he's hit the liquidations for the shorts. Yeah? But there's also another thing. There is also another thing that we need to discuss. You know? Earlier on, I had a conversation with Mike Dutch. And this is pretty interesting. Mike likes to focus on bigger cycles and certain plays. All right? And we spoke about this situation in the charts. All right? So, some taxpayers have already received their tax refunds. Here's how to make sure yours isn't delayed. So a lot of people have received their tax refunds. And Mike put it simply. Given that he's in crypto, what do you think he's going to do? What do you think other people are going to do? You know? Could this be one of the reasons of this pump? Is this pump consistent with the hybrid? Yeah? 3 hits. 1, 2, 3. What's being developed? This move needs to retrace because it can't just simply go and go and go. All right? Now, I'm not sure if this is going to be the case, but I think Asia is open tonight. Tomorrow morning. Bank holiday. Friday. Let me see. Bank holiday in New Zealand. Funny that is. Okay then. And there's a Japanese bank holiday on the 11th. Okay. So, if knowledge serves me correctly, guys, all day today, that's that. All right then. Cool. So, Asia's open tonight, guys. The Asian session by principle is open, so people are probably going to start trading tomorrow, from my understanding. Okay. Can you check the 15 and the 5 for us day traders? Okay. Also, let me tell you something. Don't try not to make the mistake of assuming. All right, look. You know when we say patterns within patterns and cycles within cycles, all right? When you're trading on lower time frames, stick to the pattern that you're trading on the specific time frame that you're looking at. Okay? For example, last night I put out this projection. Last night. Okay? I expected Bitcoin from this area here to move up into the range, up here into the range daily high, which will take us towards the 39 zone. It actually went further on. So this is a cycle with it, a play within a bigger pattern. Okay? Now, what we've got to understand is this, guys. Although there is a bigger pattern coming into fruition, and I'm expecting it to come down, to come and start tapping this area here. Okay? And why is this area important? Because on the 4-hour time frame, we've got this nasty blue vector candle right here. All right? Another thing that we've got to be quite frank with, okay, is the following. The book map. Now, earlier on, the orders of the book map at 30K haven't budged. They have not moved. I'm going to have a look right now and determine if that is still the case. Because if that is the case, then something's going on. This move, in my opinion, I don't know, man. It doesn't look like it's going to be sustained. I might be challenging a lot of people's narratives here. But remember, I'm a day trader. I'm looking at what's going to happen with Bitcoin over the big, on the shorter time frame. It might challenge those who are, looking at Bitcoin on the higher time frames. Okay? Here we go. They still got 608 Bitcoin at 30K. They've kept those orders there for quite some time. Okay? Over the past 3 days, that's gone from 1,700 at the start of the week all the way down to 608. And today, especially today, you would think that they would take some of that liquidity away from that zone and start adding it closer to where price is, because they probably think that now's not the time for Bitcoin to go down to this zone. I'm not saying Bitcoin's going to 30K. I'm trying to understand the relationship between the limit buys and the limit sells in the order book. This shows me there's high liquidity of Bitcoin orders at 30K. Why would I not pay attention to that? Over the past week, we've been witnessing how in this area here, there's been an influx of liquidity. Now, all of a sudden, this liquidity is starting to appear higher. So I'm trying to use this information to say to myself, okay, as price gets closer and closer to, say, for example, 38 or 37, am I improving the chances of price going down lower because of them keeping the liquidity stagnant in this zone? Now, when you're trading on smaller time frames, for like the guys who are on the 5-minute and the 15-minute time frame, you're not interested in the 30K zone. You're not even interested in the 34 or the 35 zone. Your range as a short-term day trader on the 5-minute and maybe the 15-minute time frame, okay, is as follows. So you take on the whole and the half numbers. Right now, we're at the 40,500 zone, okay? So you would naturally be focused on 40,500, so I'll mark it off there. You'll look at the 40K zone, which is roughly there. We'll just round it off. And then you'll look at the 39 zone. No, the 40K zone, sorry. Have I done that already? No, I didn't even do it. What a guy. So 40K zone right there. And just for the nature of demonstration, the 39,500 zone. All right? Why does he not do it, man? What a waste of time. I get so angry with this stuff. Here we go. So these are the three zones that you're going to be looking at. Go on to the smaller time frames and understand where you are in between those levels. So you've got here the 39,500 zone. Price spikes up above that zone, comes straight back down and stabilizes in that area. You would use the 5 and the 13 EMA as momentum indicators to tell you if price is going to continue higher. Okay? you've got yourself what? A pattern there. For the 5-minute day traders, rise, retrace, continuation to the upside. You would understand that volatility is coming into the chart. Okay, so you'd be looking at entries in this zone. Now you come up towards the 40K zone. You break out of that zone, there's intention to move price higher. So then you do the same thing again. You say to yourself, okay, when are we going to come back to the 50 EMA? You roll onto the 15-minute time frame. You say to yourself, okay, based off the 5-minute time frame, we are very extended away from the 15. I might wait for my longs and see if I can exploit any shorts to the upside. We are extended away from the range daily high. Bitcoin has moved beyond its normal range of price action. So you've got to wait. Be careful. Because the retail trader, look, there are no vector candles in this area right now. Remember, these moves develop. Okay? The vector started here. 1, 2, 3 pushes up. Now, this is all the moon boys. All the retail traders are getting wind of this move to the upside. They feel like they're missing out. Okay? Funnily enough, this is the zone where we see most of the orders appearing at the highest point in the chart. Again, you've seen how many times in this chart right here, for every green dot that you see, if it's appearing at a high, they're pulling it straight back again. All right? Let me just close this bookmap off. Okay then, and pull that here and go back to it again. Let's go on the higher time frame. Pull run there and switch over to here. Here we go. So let's just look at this for a bit, guys. Look at all these shorts that have been liquidated. These have been here for absolutely ages. All right. Let me pull up another chart for you. So here we go. This is the orders of shorts beforehand. Look at the long liquidations. This was when we were at 37. Okay. Actually, this was early. This was in yesterday's stream. Go to the stream. Bitcoin, they don't care. Crypto world drops again. Okay. And you will see the conversation that we have on the stream about this. All right. They came down and hit those longs. All right. The shorts were being added. Look at the concentration of liquidity that is being added. All the dark blues are short liquidations at 25x. Market maker knows that's where the liquidity is at. All right. Now down here, you can see we've got long liquidations that have been attacked. They've taken those liquidity orders and they stabilized for a bit. So then when we look at the actual chart itself, you can see that they've just made the run all the way back up. So if I normalize this chart again and pull up the tier 1 and cross-reference this, it's going to help you understand the relationship between market makers from one zone of liquidity to the next. All right. So give me a sec for that. And that should be done. What's the check like in here? 2,500 of you in the room. Mad love and respect for you guys, man. God bless every one of you single guys. I'm glitching out, by the way. And is Bitcoin moving? Here we go. Here we go. There she is. Here we go. All right, then. So what am I looking for? 800 EMA. There it is. Let's have a look. Cross-reference the liquidity. Here we go. So nearby at 40,700, there's $80 million worth of shorts liquidated. Is that the case? They've taken those shorts. All right. So let's look closer. Stick with me on this one, guys. Just watch this. They're making a run for the liquidity because nearby 40,770 was, we spoke about this in the Discord earlier on. So they've hit that zone. They've also hit the 845 zone. Okay. Where did they stop at? 887. So they stopped at the 887. So they've absorbed that liquidity. They've absorbed this liquidity right here. Okay. We've got a couple of 50x orders at 4876. Have they hit that zone? 4876. Yes, they've hit that zone. So what the practice that I'm doing here, guys, is I'm verifying the move. Okay. And where is it likely to stop? Okay. So if I go back in again. Sorry, it always does this. We've got 41,149 is where $85 million worth of shorts are going to get liquidated if they continue higher. Okay. And then the final spot between 41.5 and 42, we've got ourselves another 78 million and another 55 million. But after that, after this zone, there's no liquidity. And it wouldn't be the first time that they haven't gone to a pool of liquidity where we would naturally think they would go to. All right? But this is where the next cluster of liquidity is. Now, remember, guys, look how close they can move towards a liquidation point on the basis that we think they're going to hit it. Look how close this wick got. And it pulled straight back. Okay? Because they would want to encourage more traders to go short in that zone. Look how many people went long. $123 million worth of longs were opened at 40,462 and they just snapped it straight back and hit the liquidation points. How sad is that? Do we get the idea of what this is? Okay. The big bubbles are what you really need to be focusing on. It makes you question, okay? Why are people not paying themselves when they're in trades? Yeah? This chart itself should tell you. But that's why you see these fast moves happen, guys. Because traders go through emotions. They go into states of denial and then they can't accept it. They can't accept that Bitcoin would move so fast up. That's why they've made this move happen. They've used the news or whatever motivations there were to move price up because we've been waiting for them to hit this liquidity since the start of the week, guys. Because there was more shorts than there were longs, but they were spending time attacking the longs at the start of the week. Look, at the start of the week, there was $5.5 billion worth of longs, okay? Liquidations. And there's $10 billion worth of shorts. Okay? So they're always going to go for the money. Now, these long players are sitting nicely. But are they paying themselves? Yeah? Look at all these orders right here, these little red dots. These are traders in denial that they think they're going to get in at a higher price to go short from. Nah. They just keep marking it up until they've changed enough of people's belief that Bitcoin is going to continue to the upside. And then that's when the narrative would adjust and the market maker will start coming to attack $18 billion worth of long liquidation points. Yeah? Does that make sense, people? Does that make sense? Guys, just look at the range itself. Okay? You've seen many a times. Let's look at these altcoins. Here's an example of an altcoin that I'm talking about. Okay, the behavior. All right, I'm going to split my screen. And I'm going to try and find an altcoin just to put this point across to you so you can understand what I'm saying. And the result of the behavior. So let me just pull up Link, for example. Let me see if it does it on Link. No, it's not done it there. Not done it there. Bear with me a second, guys. I'm looking for an altcoin that has shown in the past. It's come up. Here we go. Here's an example of it. Look at this. This is Ox. All right. Now, just look at the price action. Whenever you see price spiking up to a moving average at speed, okay, it's always coming down because of the narrative of the move itself. There's a big progressive move to the downside. This move here, with the exception of them actually rising, because you ideally want to see that, but as you can see what happened, they then they took price back up, hit that zone, and aggressively came down and did the same thing again, and then aggressively came down again. Whenever they are hitting extreme moving averages that are out of the zone, because when price action is here, that moving average is too far away, and that's the 15-minute time frame. If you look on the 1 hour time frame itself, okay, it will be a little bit higher. Check this out. Oh man, here we go. There you go, 200 EMA right there. Extreme zone, too much ground. Come back and hit the previous pools of liquidity over here, pulled it back. Did exactly the same thing again, pulled it sharply back. Now, of course, this is an altcoin. This is Bitcoin we're talking about right now. See, when you've got a coin like Bitcoin that is so heavily traded, it's going to take a little while for those moves to happen. So you need to pay attention if Bitcoin's going to break higher, tap this liquidity here, and at least see a retrace. I'm going to talk about Ethereum in a second. Look at that. Despicable, isn't it? Nice drop down. Straight back up, recovery of the wicks. Of the vector candles. But remember, people are short in this zone. Because the market maker opened his longs. Yeah? If we can get back into this consolidated area, that's good news for Bitcoin. All right? Go on the higher time frames. Sharp move up, sharp move down. Yeah? Nowhere near the 200 on the higher time frames. Roll onto the daily chart. What do we see? That's the thing. It's only come back up to these zones that we were a few days ago. Quite well. January the 20th. So we're back to square one where everyone's motive was Bitcoin's going to go to 30K from this zone. When we were on this zone at the 20th of January, everyone was expecting 28, 10,000, 15,000, 0. We're back in the same spot. Now everyone's calling for 100K. There's no loyalty in trading. They just want to go to the money. Bitcoin's below the 50 EMA. On the daily time frame, there is no bullish market from one candle that only recovers the last move that happened on the 21st of January. Okay? This is not a bullish move. It's just a break to absorb the liquidity. The next daily candle will show precedence and proof that this is the time to move higher. This would be the zone. They need to break the 50 on the daily for the bigger players and the guys who are trading the bigger swings to the upside. Okay? That's what you're looking for. Did you think Bitcoin was going to go to 100K from here? No. Did you think from here? No. From here? You wouldn't think so, would you? So why is it at every moment price comes up, people get excited? How many times have you seen this? Pattern watchers. How many times have you seen price do this in a downwards trend, show a vector candle on the 1 hour time frame and pull back straight after the next candle? Check this out. Here we go. Similar principle. Big vector candle coming up above the 50 EMA, can't close above it, drops straight back down. Same principle here. Comes above it, doesn't make it, comes back down slightly. Give you a better example. Here's an example. Big push up right here, stabilized price, pump, 1, 2, 3 hits, drops it down. Let me give you another example. Another big vector candle. Here it is. One big push right there. It did come back down and recovered the vector, came up and spiked and then dropped down lower. Okay? That's why you look for clean confirmation away from a zone. All right? Where we at again? Same story. Same again right there. I need to find those 1 hour vectors. See now here, you've got here, right? Drop, rise, drop. But this zone is different. Why is this zone different? Because they've manipulated the range already and there is structure in this area here. They left liquidity up here. Okay? Now for them to come back up towards these areas of liquidity because there was not much happening here because the vectors have already been recovered, they need to move price into the next zone of liquidity, which then takes us to the left of the chart. You look left and you can see in these areas here, they're coming back to previous zones of liquidity. And then you've got that big vector candle up there. And then you see how price comes and spikes that zone. So what I'm saying to you guys is, if you're watching the daily time frame itself, you then need to say to yourself, okay, then at what point does my interest to see Bitcoin move higher? Okay, is it going to continue? At what point do I decide to go long? Again, that is down to your level of risk. There are no facts when it comes to trading. There's no fact that it's going to play out the way you think it's going to play out. This is why you've got to improve the chances of your trades or your trading career as such by using small amounts of money to become proficient in the strategy so that you can build up a big enough sample size to develop the confidence to open trades and not care about the outcome. If it's positive, you pay yourself, get out. If it's negative, you cut the trade, change direction. That's the nature of trading. Okay? Let's have a look at Ethereum. So I know people want me to look at Ethereum. Another thing I'm going to look at as well is the Ethereum pairs. All right, I'm going to look at Ethereum pairs. A couple of guys reached out to me, talking to me about how these gap plays. Harry, are you in here, bro? I know you've been exploiting those Ethereum pairs. Okay, so same story with Ethereum. They're only coming back up towards this liquidity zone right here. Proof of this move would see them coming back up above this zone. You've got the guys trading the death cross. Okay, so was this initiated to trap those traders to the downside and come back and hit their liquidation points? Yeah, this is what we're waiting for. On the 1 hour time frame for Ethereum, see, this is what I love about Ethereum. Okay, when Ethereum starts to trend, she moves nicely. Now, Ethereum hasn't broken above the 800 EMA just yet. If we pull up the high block capital and have a look at Ethereum's liquidation points, we're going to understand what are the chances of them actually taking them out based on this move, because Asia's going to be open tonight. So I think we're going to have some activity based on what I understand about this marketplace. What's going on, guys? Yes, Harry's in here, guys. Harry is in here. His name is Harry Chin. What? Change your name, bro, man. How you doing, Extreme Master Player? How you doing? I will check that. I'll check Cake out. Yeah, I'm going to go through a couple of altcoins. Yeah, I will go through a couple of altcoins with you guys. Bear with me. I just wanted to get the narrative of Bitcoin out of the way, because I want people to still maintain the idea that you haven't missed out on anything. If you're a day trader, okay, you would have missed out on a nice move. Okay, you would have. Let's be honest. It was a nice move to the upside. Now, when you look at it on the 1 hour time frame, for example, Ethereum, okay, you would say to yourself, man, I've missed out on a good move to the upside. Fair game. Break it down to lower time frames. All right. Now, depending on what your flexibility is like with trading, there are factors that we have discussed in this stream time and time again that you can utilize to exploit these sort of plays. All right. Here's an example. Someone asks the question, what are stopping volume candles? So you see in this area here, there's a mini pattern. If you were to literally just take the concepts of the hybrid system. Now, if you are new to the channel, ladies and gentlemen, be sure to join the Discord, okay? Or go to the Traders Reality website to download these indicators you see in front of you. They are free of charge. They don't cost you anything, but make it into the Discord. That is also free, so you can understand how people are using this system, okay? But for example, for the day traders on Ethereum, and you missed out on a big move, how could you have worked out if this was the case? Now, listen, I am talking in hindsight, guys, okay? But you've got to remember this. I can't catch every single pattern in the charts. I will give you a breakdown of the overview of what I think's going to happen. We've been expecting Bitcoin to move into those previous zones of liquidations to the upside, okay? We've been waiting for them to do it. We waited for them to hit the longs and they hit them. Now we were waiting for them to hit the shorts and they hit them, okay? Now this is Ethereum. Now Ethereum has not so much. In the chosen range, there's $1.73 billion worth of longs trapped in this area. And there are a lot of 25Xs in this area too. The shorts that were in the chart was only $500 million. Okay, so not that much. But the principle was there. They hit them. We had one hit right here. 25 million there. 27 there. And then final zone in here. 45. And then they made the run towards the liquidity zones in this area here. All right. Now look, stick with me on this one. Check this out. We're going to look at Ethereum collectively. Well, actually all of the liquidity, to be fair. Let's do that. Tino, are the big bubbles in the bookmap market maker orders to push price? Yes, the big bubbles are big orders, and those are the ones you need to be focusing. Yeah, focus on those. Right, so this is Ethereum right now, guys. And you can see Ethereum's longs were 1.28 billion, okay, in this range right here. All right, just this zone right here, where the delta is as such. Now we've got $4 billion worth of long liquidations built into this zone. Just look at the disparity right now. More longs at 25x. Look at these 25x shorts right here. So really, what I'm thinking, the same with Bitcoin. Right now, look, someone $20 million worth of longs have been opened at $2,970. All right. When you zoom in closer, the idea is to try and exploit the hybrid system in the sense where if you can see momentum developing into the chart, what are the chances of them hitting the liquidity? So they could actually drift price up now all the way up until 3,000 because we're not too far from a whole number. So there's no reason for them to not drift price up to the 3K zone. And once they get to the 3K zone, they could spike price up, take the liquidity there, and probably pull it back down again. At that same time, they are committing more longs in the zone. See, if you notice, look at the green dots that are appearing as they move up. So you've got one dot there, you've got a couple of dots here, and then you've got a dot finally to the highs right there. These are all longs being built. They crash price back down and hit all those liquidation points. They start again. $17 million worth of longs enter, and then another 13, another 10. They move price up to the upside. They get them to commit one more time. We got 10 million there, 10 million there, 12 million, and then of course another 11 million in that zone. They spike price down lower. They hit those liquidations. The liquidation zones that they take are the 100x traders, because that's the dead money they can get quickly, because traders are using 100x are going to have closer liquidation points than those who are trading 25x. Okay? They want to keep the guys with 25x in longer. So they have to move it higher to make them pay more positions and add more positions as they get to higher points, so that they can release price to the downside to absorb more liquidity from the guys who are going long at 25x. Look, we've got $20 million worth of longs at 2970. That's where the liquidation points is for the 25x in that area. Okay, so that's where the distribution is. Okay, so with this thing here, it's about understanding how do you translate the behavior of the market maker in this area in relation to price action itself. So we'll then look at price and we'll say to ourselves, what are you doing? Here we go. So we can see, we know at 2,970, loads of guys have just gone long. All right. $20 million worth of longs. The nearest point for liquidations is 2,955. That is crazy. So I'm going to mark it off on the chart just to give you an understanding of liquidation points. So there's that right there. It's not even working. I'm going to break this computer. 2,970 is right there. So that's where the longs were. That's where they opened long. And 2,955 is where the liquidations are. All right? Right there in that zone. Now, cryptocurrency is probably one of the most volatile markets on earth. How is that giving the chance for a coin to actually move? And how are you improving the chances of your trades working in your favor when all it takes Bitcoin to drop $50, $60 when it's moved up today nearly how much? Ethereum. When it's moved nearly what, $500, $600 today. How are you able, the $300, $400, whatever. How are you able to give yourself the chance to succeed in a trade when you've got such tight stops? That's why people keep on getting stopped out. Okay, because they're using little money to try and take advantage of high leverage trades. When you've got the 25x traders, they give it a little bit more flexibility because they've got more margin up front. So they're committing more liquidity using less leverage, so they've got more breathing space. And that's who the market maker wants to induce. Okay, he wants those traders because they're fixated to those positions because he wants their margin. Because still at 25x, you're still putting up margin. It's still leverage. Do we understand what's going on here, guys? You get the idea of what I'm trying to do here? Yeah? Can you short without using leverage? Well, you'll never not use leverage. You'll probably use like a 1-to-1 leverage. But yeah. I need a bet. Tim, man. Tino, I'm curious. Have you looked at the higher time frames with the hybrid system and have a personal viewpoint on which direction you think price is going overall in the next month or two? Okay, so do you want me to look at... All right, all of you here. Type 1 for yes, 2 for no. Do you want me to look at Ethereum and Bitcoin's view in the next month or two on the 4-hour time frame or the daily time frame? Please let me know. Do you want me to look at my projection of Bitcoin and Ethereum in the next month or two based on the 4-hour time frame or the daily time frame? Okay, so 1 yes for 4. I don't even know how I've done that, but just roll with it. I'll just do it anyway. Forget it, man. Oh my days. Listen, guys, I told you I'm synthetic. I'm glitching out. It's that time of day now. So please bear with me. Okay, so you're just, I know, ones or twos, doesn't matter. Yes. All right, here we go. Let's start with Ethereum then. All right. 4-hour time frame for Ethereum. What do we know? Straight back to high block capital, and let's bring up the bigger picture on the chart right there. And I'll go back to this right here. Pull up the 5. Is the 5 going to give me a higher view? Bear with me a second. Let's see if that's going to work. Okay. This is what it's got to be. This is the near term. All right. Just drop your brightness on your screens. Here we go. So Ethereum, I'm going to start with Ethereum first because I just go on about Bitcoin too much when it decides to wake up. Please wake up. I've actually got the chart right here. Here we go. Okay. So in a month or two. Now looking at this chart right now for Ethereum, okay, it would be a little bit obscure to actually assume where's it likely to go in a month or two from this zone based on these liquidation points. Okay, there will always liquidation points being hit, but this platform offers you it in a certain range. So from 3,100 all the way down to 2,400, this is the range right now. Okay, so I'm not going to base it off this. Okay. So if we look at the 4-hour time frame for Ethereum, we can see we're at the 200 EMA on the 4-hour, which is the 50 EMA on the daily. Let me verify that. Mark off the 200 EMA right there. That should be the 50 EMA on the daily. Bring it up. There it is right there in that zone. Okay? So, go back to the 4-hour time frame itself. And what do you have? You've got previous recovery of the red vector candles. Okay? We zoom out. And we understand that if Ethereum is going to continue higher, there are zones in the chart that she would need to recover for us to actually believe, okay, what percentage or what's the probability of them continuing from each zone that they return back to, okay? So the next zone for Ethereum to return back to would be this area right here. And this is where we would get the information, okay? Now, because the moving averages are quite fanned out on the 4-hour time frame, if price ends up in this area here, the 200 EMA at that point would probably turn flat and the 800 EMA will start coming down like so. So then we may end up getting a period of consolidation in this area where we would naturally be expecting some volatility to come in because the 50 EMA would then come up like so and then it would flatten out. All right. So that is where we could end up in the next couple of weeks or so based on the price action for Ethereum on the 4-hour time frame, because that's quite a few candlesticks. Now I'm talking all the way in this area here. So between the 3,400 zone and of course the 3K zone down here, for example. Now, if they consolidate in this area long enough, the longer the consolidation, the better, because we're going to get more of an understanding if they're building shorts or longs. Okay, that's why I want them to come down sooner in Bitcoin. Do you see what I'm saying? Because if they come down sooner in Bitcoin on the, for example, look at this blue vector candle right here. It's an open space. All right. And I want them to come down sooner rather than later, because then that means later the move to the upside is not going to be sustained. Do you understand what I'm saying? If they're building these zones of liquidity in the chart, zoom in. If they're building these positions here and not coming back to them sooner, then that's a concern for me. Look at this. Rise, retrace, continuation. That's why I'm so fixated on retraces, because retraces tell me that we're not going to go back to that vector candle anytime soon because we've covered it already. Do you understand? Which was the narrative for this pattern that I've been waiting for with Bitcoin and Ethereum. They haven't come back to these zones right here to induce traders to go short again so they can grab more longs to move away from the zone. That's the goal. Because now that you see these vector candles right here in the chart, you're naturally going to say to yourself, well, when are they going to start moving back towards them? And then you're hesitant to place a trade because you're thinking that when you go long, that's when they start breaking down price. Which is why you always wait for the retrace, because the retrace gives you the information of whether they want to come back to this zone, get the money quick time, trap more traders to the downside so they can build more longs, which fits with the narrative of what they were doing here. because they were doing exactly the same in that red candle right there, and they were doing exactly the same in this zone right here. Does that make sense, guys? You see why it's important that you follow the retrace and wait for it to happen. If the retrace doesn't happen, wait until the next retrace appears. You will always get opportunities because it's evident that they're going to retrace price back to the zones. And the sooner they come back to a vector candle, the more likely that the interest is going to step back in if their intention was to move away from that zone in the first place, which is the narrative of the pattern itself. This is why it's a psychological pattern. You induce traders to go long in this area here. You're going short. You realize profits on those shorts and build more longs at the same time to get the same guys to commit liquidity to move up again. That's the beauty of this pattern. And if we can see that pattern playing out, we're then able to improve the chances of a high probability trade because we haven't got the worry of price coming back to the vectors. That's why I was so concerned about this area here. Am I still looking at this zone? Yes, I am. Do I still think price is going to come down towards these zones? Yes, I am. How soon is it likely to come down? I can't tell you when, but I know at some point they're going to break price down in this area here if they can't come away from this zone. That's why I'm saying a $400-500 move in Ethereum, a 3K move in Bitcoin to the upside does not solidify a change of bias, and you should start going and looking for longs to the upside. Those of you who have made money today on Bitcoin's move and Ethereum's move, pay yourselves. And even if you look in the charts tomorrow morning and you realize that price has moved up to the upside and you had closed your trade in this area here, well, guess what? You have just solidified that no one went broke taking a profit. You still got your profit. Don't dwell on the hindsight of what you could have had. Because I could say to you, guess what? The national lottery, the jackpot is 700 million, for example. I tell you that. But you don't play the lottery. Are you going to hit yourself? Are you going to put yourself through torment because you didn't play the lottery? And does that mean that you were going to win? No. So you can't dwell on what happens afterwards because you never had control of it. Because you wouldn't be looking at the charts and trying to analyze the behavior if you knew for a fact it was going to continue up. Why would you put any stops in place? To protect your capital, to protect your profits. Okay? So again, 4-hour time frame. We need to come up into this zone right here, which is the next consolidation area. If we can see a breakout from this zone, then we are likely to start realizing the 3800 zone, and Ethereum would then be on its way towards its potential all-time high range again. Okay, given that Ethereum, okay, and Bitcoin, Bitcoin has moved quite aggressively to the downside, right? Ethereum has got a better chance of hitting its all-time high than Bitcoin, in my opinion. Okay, because Ethereum hasn't in essence really, well, sort of lost half its value nearly. Okay, but the move to the downside is not as aggressive as what Bitcoin was. So that's why I favor Ethereum's price action over anything. If I'm scalping, I'll normally scalp Ethereum, but predominantly Bitcoin. But Ethereum just trades really well. Okay, so that's the 4-hour time frame. Let me do the daily. Again, where are we? We're trading below the moving averages, okay? Where are we in terms of momentum? 1 hour, 2 o'clock, 2 o'clock, is it pointing to the upside? No. What direction is it pointing? 4 o'clock, 5 o'clock. So momentum is pointing downwards. One candle like this doesn't mean it's going to continue. Only way you get proof of that is if it continues and slowly moves away from the zone. Not at speed. You don't want speed. You want slow trend, true trend movement. Could this be the start of it? We will know tomorrow and the next day and the next day. They need to break this area here, which takes us into that previous consolidation on the 4-hour time frame. And we've got liquidity up here and of course up here. If Ethereum on the daily can cross over the 200 and the 50, there is a good chance that from that point right there, the retrace back down should see the continuation up. Which proves that in this area here, if the interest is present, they will move from this zone. How long is it likely to take this? On the assumption that Ethereum is going to do a slow trend, true trend, it could take us all the way into the first week of, well, let's say, I mean, how soon can Ethereum go up to this zone right here? This is the daily time frame. That's on the assumption that it continues up because it could hit the 50 and bounce back down again. So you've got to work out, how long do you decide to stay in a trade for? Do you see what I'm saying? I've been chatting away, guys. I've been chatting away. I have been chatting away. I want to thank you all this evening. Mad love and respect for anyone who's been passing through to the live today. God bless all of you. Okay. But we are going into the weekend, and I'm going to address something with you as well. I've had some people saying to me that weekend is the point where certain patterns always play out over the weekend. You know what? Happy days. Okay. But the weekend is notorious for getting people wrecked. Okay. Today is Friday. Technically, it's the start of the weekend. Okay. If you haven't made money from Tuesday to Thursday, and what bets are you going to have making money when the volatility is low? Sorry, the liquidity is low at the weekends. All right. So all I'm saying is proceed with caution, especially if you are new to trading. Don't confuse the idea of having time as the reason for you to trade, which means that you're going to be successful at it because you've got the time to do it at the weekend. All right. You're better off starting trading on Tuesday, Wednesday and Thursdays, waking up early doors before you go into work, for example, taking a few scalps in the morning before you actually leave the house, and maintain that discipline. Fast in, fast out. At least you'll be going to work every single day knowing that you took a profit from the market. Rinse that and repeat it every single day, and then you'll understand what the power of compounding is. Yeah? Improve the chances of your trades playing out by trading at the most optimal time. I'm only interested in keeping you guys in the game. All right? Because it's a beautiful game. And I want people to enjoy it. I want people to just understand the hybrid system. If you're coming to the channel looking for signals, you won't get them, bro. I'm going to try and give you the tools to get your own signals so you take your own trades and earn your own money without having to rely on anything. Yeah? Mad love and respect to every single one of you beautiful people. Have yourself a wonderful evening, and I will catch up with you guys over the weekend. All right? Take care of yourselves. Peace.